Hi traders, this is Chris from Elite Currency with a new update on the euro dollar and pound dollar as always nowadays on Mondays. First of all though, I've been mentioning the SWAT offer through Key2 Markets Broker and that you can get the whole course for free for quite a while. I mentioned it a couple of times already in these videos, but you might be wondering what is SWAT about? Is it worth the effort? So I did write a book about that, a trading guide that gives you a 360-degree view on our ideas and methods, or the ones I mentioned at least in the SWAT course, and it's available for 24.95 euros. So it's not that pricey. It's a cheap price here. So I think that most of you should be able to afford that. If you're interested, you can get this PDF with a lot of examples, a lot of images, about 600 pages. Really describes everything in full. So this might be a good spot for you. I'll add the link in the video description box. Alrighty, time for the euro dollar weekly chart. Last week was very bullish. We had a massive bullish candle with no wick at the top, the close right at the high. Let's take a look at that. We had basically a difference of just 3 pips. So that is really nothing considering the fact that the entire candle is more than 250 pips. So it's extremely bullish close, and you can see that this week is off with an immediate continuation up to the target zone of 117.25. That target zone was mentioned last week several times, that price is likely to move into that 117.25, 117.50, and 118 zone. Price did that right at the start of this week, just based on last week's massive bullish candle. And this candle is 250 pip candle basically. Well, that's quite a big one compared to the low volatility candles here. We had some of those candles in past months before, but it was quite a lot of choppiness in its volatility. Strong down, strong up, strong down, strong up, sideways, and now we're seeing a strong up, wave 4 and 5. So that pattern, as we suspected, is bullish, and that's happening right now. We are seeing probably 1, 2, 3, 4, 5 in motion. Now we're getting to a spot though that is a 38.2 fib. That could be a pretty hefty resistance spot, and there could be a reaction to that level, and there could be some kind of I would say correction. Question is how much. A more cautious trader, I think, wouldn't aim too far, because if you put a fib from here to here, I think that the 23.6 fib could easily be a bouncing spot at 115. So personally, I wouldn't aim further than that at this moment. But this could be a reaction where price might make a correction down to 115 at the 23.6 fib, which could be a bouncing spot, because with this break above the 144 EMA, after years and years of price being below it, does, in my view, signal a different landscape, a different vibe, a different structure. And we're seeing probably the end of the euro-dollar downtrend and the end of the dollar strength trend, and probably now a euro-dollar uptrend for some while. So after the correction, I do expect price to continue with higher highs and higher lows, up into at least the 78.6 for the moment, around and the previous top, and maybe build some channel to the upside. That could be a spot where we might see a bigger correction, or even the 61.8 fib. We could complete a wave A as well, and then see an ABC, bigger ABC down, and then again an upside. So this, bigger ABC is possible as well at, for instance, the 61.8 fib. We broke pretty clearly above the 50 fib, so that didn't seem to be much of a worry. Now we're at the 38, but it seems like maybe the bigger level to think about is actually the 61.8 fib at 118.25, because this is actually a bearish fib. So let's take a look at the daily chart. You can see this was the wave 4, price respecting the 21 EMA. All of that is explained in the SWAT course, by the way, and SWAT book as well. And this is just a run up without stop, beautiful momentum. But I think that not maybe right now. I think that it's likely probably to continue higher. Actually, considering this momentum, let's take a look at the 4-hour chart. And price is really pulling away from the 21 EMA. So it would be good to see a bull flag pattern or triangle back to the 20 EMA at around 116.50, 116. And that could be a good bouncing spot for one more higher high up to 117.50 and even 118 or 118.25. But eventually that zone, when you get maybe 2 new highs, something like this, correction higher high, correction higher high, you might see some kind of rising wedge pattern. That's the moment when price hits 118 and that 61.8 fib of the weekly chart that price might make a bigger correction and maybe a bigger ABC pattern to the downside. For the moment, that does not seem that likely. There's not a ton of space, 120, 100 pips left basically. But if it makes a correction, it could grow into a space of 150 to 200 pips. That makes it already a little bit more interesting. Okay, so what could happen is that price might not make the correction right now. It might first pop up, tag the 117.50, and then build the flag like this, and then make one more higher high. That's certainly possible. But at this moment, I would personally wait for a flag or triangle pattern before trading it to the upside. I wouldn't trade it to the downside because it's too much momentum, and I don't think those reversal trades will offer anything. But I wouldn't want to trade it to the upside because I think that 117.50 is too close. I would like to see some clear pattern first, and then trade that small push up still to 118, which is a spot where that ABC could start. Now, are we sure that the ABC will start there in this zone here on the weekly chart? No. Who knows? The momentum could be so strong. If we see another flag, there could be another push. I don't know. It's possible, right? That it just breaks through 117.50 and heads to 120. But it's certainly an area to be cautious of at 118 and could start an ABC, but I would only trade it if I see a clear daily candlestick pattern at the 61.8 fib showing bearish engulfing twins, for instance. It has to be a very good pattern that says, okay, there's a fair chance that after this daily bearish candlestick gets retraced, that there's some space down to 115, 115.70 to trade that reversal perhaps, right? But if it doesn't, if you see dojis here, that actually could indicate a continuation breakout. So, got to be careful at that 118, not to jump in reversal trades too soon either, in my view. So that's about it for the moment. Retracement, continuation, pullback, follow through, flag, continuation, rising wedge pattern. Do we see a flag or a reversal at that spot? Pound USD, bullish 2 and clearly breaking above that head and shoulders pattern. That seemed already likely here after price bounced at the 21 EMA, but certainly after it broke. And it's headed up. It's continuing. We had an immediate follow through on Friday already, actually. First signs of pushing above the WIS 7 and double top. And earlier today, right away, that followed through up into the 128 zone. Actually, above 128, going all the way up to 128.50 almost. No, more than 128.50. So, yes, 21 EMA holding again. Ascending wedge, broke to the upside. All of that mentioned in my wave analysis as well. And triangle pattern here. Break, pullback, continuation. Nice pattern there as well. So what is the ultimate target here? It could go up to 130 at this moment with 127.50 being broken. I think there's a fair chance that we're looking at some type of impulsive wave to the upside, and I think there's space for continuation. So looks pretty good for an hourly chart, perhaps even. And I think that maybe some flag here and a break would be good for a move up into probably 130 as the main target, but we can see maybe a local target at 129.20 with WIS 8 there. So this is not a flag pattern as yet, but if we do create a flag or triangle, that would be interested. I would be interested in trading it to the upside here as a continuation of that momentum further higher with pretty good space and a pretty good momentum. So that looks good, but I would want to see some pattern first myself. We had a nice pattern here, of course. So anyone trading this flag or this break is doing well. And personally, I think that just trail stopping the 21 EMA low makes sense. Maybe going 20 pips below that or 25, and in my view, and the trail stop loss at 127.70 or 69 could make sense. Gives it some space to move up, but also locks in some profit and reduces the risk depending on the entry. But this was a pretty good bullish pattern, moving up nicely. All right, that's it for now. I guess I hope I mentioned everything I wanted to, but we'll be back again later this week with another update, another video, and I wish you all good trading. Cheers, bye-bye.